Welcome back to the Compass. My name is Derek Macpherson. I'm the executive chairman of Olive Resource Capital, and with me, as always, is Sam Pelaez, president, CEO, and CIO. We're actually a couple days late filming this episode. We were going to film it on Monday, and I think that worked out okay for us because there's been a little bit of industry news that is worth discussing. Is worth discussing today.
Everything from news at the very top end of the gold market to some of the smaller exploration companies on the TSX Venture. There's news all over the place. So lots of material to cover on this episode.
Yeah, I think maybe let's jump right into it with the news at the top. On Monday of this week, so that would be September 29th, both Barrick and Newmont announced CEO changes. We could talk about the whether they're a coincidence or not, but maybe Sam, I'll let you talk about, because they're two very different changes as well.
Yeah, one is a clear succession plan. It was very telegraphed, if you wanna say it that way, and that's obviously the Newmont CEO change, where the COO has taken over from Tom Palmer, and like I said, not surprising for anyone. I think the surprise comes in whether it was coincidental that they were both announced on the same day.
We could put on our tinfoil hats in a second. I don't think it would have been a surprise either. At Denver Gold Forum, or at the Denver Gold Forum, Natasha presented as well. So on behalf of Newmont. So I don't think I think we knew, and I think she presented last year as well. So I think
she presented last year as well.
Yeah.
Yes.
So I think this was a let's put it, this was a well planned and thought out event, I think. On the flip side, Barrick announced a CEO change. Obviously the Bristow, who's been a significant builder in this industry and created a lot of value for people over the years, clearly does not look like a well planned or thought out change. They put in an interim CEO. And it seemed a little bit sudden.
So yeah, number one, the fact that there's a caretaker CEO, it's quite interesting. That tells me that obviously the board wanted to run a process, but naturally Bristow probably didn't want to be there for the process, which probably suggests or implies that he didn't agree with the decision, which wouldn't surprise me. Now, I want to touch on a point before we come back to Newmont and Barrick, and that is, typically what happens in this industry is that there's bear market CEOs and bull market CEOs, and there's typically like a small lag effect. So, Bristow historically has been more of a defensive, conservative CEO. Now that gold prices are all-time highs, naturally, I didn't see the skill set to aggressively take advantage of the dominant position that Barrick has in certain places. And maybe that's part of the reason. Like you also probably remember, he was quite deep focused on copper as the new metal for Barrick. And in a sense, you could say that he took the eyes off the gold bull. And now with gold at all-time highs, that created the void and the window for the board to make a decision.
I think you could make the argument, though, also that part of this boils down to Barrick missing on a lot of M&A opportunities. They famously missed on Great Bear. They famously missed on Pretium. And I'm sure there are others that we're not sort of aware of on the gold side. And I think that those CEOs at the time, so Newmont buying Newcrest, ultimately buying Pretium, and then Newmont buying Newcrest, Kinross buying Great Bear, Anglo buying Sentiment. Those have because of the timing of those transactions, they have proven to be brilliant, for lack of a better description, and look very smart. And I think that, Barrick missing on those things has certainly, probably weighed on, that bull market versus bear market. And you're right? At the end of the last bull market, this would be 2012, 2013, 2014, 2015, pretty much every major gold company got a new CEO with the exception of B2. Everyone else, the CEO got canned.
And a lot of times it was the CFO that got promoted, right? Like more conservative balance sheet management, not so much about strategic initiatives and growth. It was all about like keeping the marbles under control. And now, that's reversing. And some of these CEOs will be smart enough to adjust with the changing market conditions. And some of them will eventually have to step aside to give way to a more growthy CEO. And we can go back in history, even the large miners, BHP and all these guys, they go through the same cycle.
Yeah, I think that's the point. Now, I don't know, now I think just for fun, let's put our tinfoil hats on and talk about what we think it means that both CEOs changed on the both CEOs of the two, I think largest by ounces gold companies. Now, Barrick isn't the second. Newmont's the largest, and I believe Barrick is the third largest now. Changing on the same day. Do you remember famously that shortly after the Goldcorp transaction, and this was shortly after Barrick had merged with Randgold and Bristow become the CEO, Barrick made a bid for Newmont at that moment, which resulted in the creation of Nevada Gold Mines, which was actually a very smart thing for them to share infrastructure in that area. But now that you have these two companies, they're both their largest assets are is the shared entity in Nevada. I think it's 60-40 Barrick Newmont. So, what does that, let's opine on what the apparent coincidence of these two CEOs changing on the same day.
Well, statistically, as a coincidence, the probability is extremely low. I don't know. It felt to me that maybe Newmont was ready to make an announcement, and then when Barrick made the announcement, they just made the decision to put it out that day, right? It was probably something that had been already. They probably maybe learned over the weekend that this news was coming out on the Monday, so they accelerated their news that was already in the pipeline. That's a possibility. The tinfoil hat one is the boards are talking to each other, presumably through some bankers or some intermediaries, but they see an opportunity to align themselves in all situations or certain situations. So, like you said, the main asset on these balance sheets is the Nevada Gold Mines. That is today Barrick's growth asset with the 4 Mile presentation that they made at the Denver Gold Show. Newmont is a minority partner on the Nevada Gold Mines. There is something, if you're looking from the outside, there's something to do there. But if those are the two biggest assets, isn't it easier to just do the whole company and then divest assets like Newmont just did? Like Newmont is coming off this, I want to say, timing-wise, they could have waited more, to be honest. But, who knew at the time when gold prices kept going higher? But they're coming off a successful divestiture process. So why not consolidate the key assets with Barrick that they have with Barrick and then put the other ones up for sale? There will be a lineup of producers willing to take on other producing assets ex-Barrick. So I think that could be a possibility.
That's a valid point, right? Putting these two companies together, you have a number of large-scale key assets. Some of Barrick's probably higher risk assets, I think that Newmont would probably divest. I think that's where you would see it. But coincidences rarely happen. And M&A, it wouldn't be the first time that a CEO resigned because he didn't like the path that M&A was going down, and the board was pushing him in that direction. The fact that they didn't replace Bristow with a permanent CEO really does suggest that something like this, that this type of merger is a possibility. But it could just be that it was time to change. It was time to make both changes at the same time, and it could be a coincidence, but. It is not a zero probability that there are M&A discussions between Barrick and Newmont right now. And probably these discussions have occurred multiple times over the years. So it wouldn't surprise me at all.
Many things can happen here. Maybe you put together these two companies and you split them into two companies, but with different geographic focuses or Naturally, if you put the companies together, there'll be assets that are not non-core for that entity of that size. I don't know if you put them all into one company, divest them one by one. But, there's already two JVs, right? We talked about Nevada Gold Mines, but there's also the Pueblo Viejo JV. There are immediate synergies here on the operational front.
Pueblo Viejo is like one of the largest assets in Latin America, probably only rivaled by Lundin Gold's Fruta del Norte, which is getting up there.
It's exciting to follow this one, but naturally, I think those conversations are being held, if they are being held, so high up that we'll just have to wait.
Yeah, I don't think
there's one consideration that we haven't discussed, and it ties up into something we mentioned last episode, which is passive flows, and that is Barrick is not a constituent of the S&P 500. Newmont is. If Newmont were to buy Barrick, it would, not double its size, but grow by whatever 70%. I don't have the numbers in front of me. This ETFs and these passive flows are typically market cap weighted. So what would happen is Newmont would shoot higher on the list, and everybody that tracks all the passive flows will have to readjust to allocate more money to this new entity. And that would drive a lot of buying of stock. I do think that would be a consideration that the bankers on the board, particularly at Newmont, would be thinking about.
And keep in mind that Newmont is Newmont is the best performing stock in the S&P 500 this year, which wouldn't surprise me, as it's the only gold stock and has done very well. So unfortunately, though, I don't think there's a trade there on this, on our tinfoil hat discussion on Barrick Newmont. I think it's interesting. I think it might, I think that these changes are, as discussed, you're moving from bear market CEOs to bull market CEOs, potentially. Maybe we get a little more aggression on M&A. Newmont is now in a position to actually buy things. They finish selling things. And we'll see who ends up taking the reins at Barrick. But there isn't really a trade for us there. If that makes sense. If we look at that and go, okay, well, what other news is out there that has created trades? And I think that something that's has been really interesting over the last couple of days has been drill results in a couple places in our portfolio. Actually, 3 different companies we had drill results that materially moved the stocks, which in and of itself is a nice change. Now we don't own a lot of exploration companies. Our view is that you tend to be able to get more value in the developers, but stories that we're close to, assets that we really like, management teams that we trust to be able to continue to advance projects, raise capital, etc. Those are definitely situations that we tend to be involved.
So talking about the statistical impossibility of things, I've gone through our portfolio in light of this, and I've counted literally 5 investments that we have made that fit this category of real genuine exploration projects. Some of them have some historical drilling here and there, but these are true exploration projects. So, and 3 of those have put out drill results this week, and 2 of them have what I would describe genuine discovery holes. As statistically impossible as that sounds, that has happened between Monday and Wednesday of this week, and to our great delight, I might add.
Yeah, I think the one probably worth talking about first is, from our perspective, is Sterling Metals. That has been congratulations to Matt and Jeremy. They hit it out of the park. So Sterling Metals, they announced on Monday, they drilled 262 meters at 1% copper equivalent. If you know the project or aren't familiar with it, it's the Sioux Copper Project, is literally off the Trans-Canada Highway, just outside of Sault Ste. Marie. It is a large scale, it's actually a past producing copper asset for a variety of producers. A predecessor company to Sterling consolidated the land package We got our initial position when that predecessor company sold the asset to Sterling. The company's called Copper Road. It still has a residual position and has been moving as well. That type of discovery hole warrants a move, and its stock did move. I think that's a good sign overall for the market that a 262 meter hole at 1% copper moved the stock 200% on the day it went out. Now it's pulled back a little bit since then, which often happens when stocks are up on a stick, but it's great. But how we invest in exploration, how we think about it is, and that's that position. That was a meaningful position for us to start with at Olive, and so that position on its own that day, moved our NAV almost 10% on that upside. And so, that's how we try and invest is that you win. But like as I said, it's kind of outside the scope for us. Typically, we're developers, a little more advanced, a little more comfort on a geologic risk perspective. So why are we here? Well, a couple things. One, we knew the project. We knew the project was in, when it was in the predecessor company. They did good work, but never really had the capital to move it ahead and drilled good holes. There's a 50 meter at 1% copper hole on that at another part of this property, and so we knew there was there. The move to Sterling put it in better funded hands that when the project moved to Sterling, and that they were able to do the work, the technical work that you need to do. And it was a quiet period for a while. And they raised a little bit of money, and we supported them through that financing. In the spring though, they put out pretty good hole, 359 meters at 0.36 copper. Now that's not an economic hole. Well, it is economic in that part of the world, but the market doesn't recognize it. It doesn't have the same splash as as 1% copper hole at 3 times the grade. But again, we kind of mentioned this when we talked about Bellevue last week. We've seen this movie before. This is very similar to what happened at GT Gold. GT Gold, which had a truncated drill season. At the end of one drill season, they drilled kind of a long, low-grade copper hole. And you had another year before they put out another copper hole to buy that stock. And if you'd bought it in that window, you would have you would have made a ton of money because then it took off, and it's exactly what happened here. Now the window was shorter because they can, at the Sioux Copper project, Sterling could drill year round, and so here it comes. 6 months later, they put out this banger of a hole. And the stock moves, and so we kept ourselves positioned to benefit from that.
I don't think I have anything more to add, other than my congratulations to the team. There's a lot of people working there behind the scenes. Obviously, Matt has done a great job raising the money, communicating the story, getting through the thick of doing genuine geological work that the market doesn't recognize. But now he's in a position to continue drilling this and hopefully turn this into a major deposit for the benefit of all shareholders.
And while the stock, what I would say is that now we are up materially, and while the stock is up, one could make an argument that it still hasn't the share prices still isn't fully reflected what they've drilled. So we'll see what the next holes come out as. I know there's more holes that were drilled in this program. But I think that there's definitely room for this to be higher than where it is now I think it's at about 70 million market cap, which is on the low side for what has been drilled and what we think the opportunity is there. A day later, equally exciting hole from a smaller position in our portfolio, but equal is Prospector Metals at their Mike Lake property put out 44 meters at 13 grams gold and 1.8% copper. Which again, absolute banger hole. I mean, we've had a small position in Prospector for a very long time, back to when they bought the Mike Lake property. This is a Discovery Group company, and so that they are going to be prudent with the capital that they spend. That they are always going to be funded to be able to move the projects ahead. And we know that they're going to do good geologic work. I mean, Rob Carpenter's the CEO. He's got a couple big discoveries to his name. We're betting on the horse as much as we're betting on the property. Mike Lake had some good historic results. These guys thought they had a new geologic model to go to apply to it. We held on for a long time in a small position. That stock was up 280% on the drill results. This is day 2 after the results, and it appears to be holding in on the back of that. And so that's excellent. That's what you want to see. But again, close to, I would say that we're friends with the Discovery Group. We're close to the story. We really trust management, and we knew the geologic upside was there. If you look back again, this isn't. It's funny with I look back at some of their results that we had seen, and we're like, okay, those are pretty good. We should hang around. They drilled 46 meters at 2.1 grams gold and 0.48% copper earlier this year. That's a good hole. It's not 44 meters at 13, but those are good hole into this target. And so I think that this is, and there were strong assays from sampling and mapping, and they really did a good job of unlocking this thing. And I'm thoroughly impressed with what they've been able to accomplish, and we're happy to ride along on the ride.
Yeah, and I think there's two things to highlight on the back of these results and the investment framework. So we have held these 2 positions for over 3 years. This is like the longest overnight success that people always talk about. These guys at both companies have been doing genuine work for years on shoestring budgets to get to the point where they could drill. Now that the market is favorable, they've done the work. They can access enough capital to do a real drill program, and now we have the results. It's a long process. A lot of people look at the stock and say, "Oh, I missed out on this stock. It was up 300% yesterday." Yeah, we did it because we held it in for 3 years. And the second point I want to make is back at the end of the Beaver Creek show, we were talking about how finally we have exploration companies with real budgets, and how that could translate from Beaver Creek this year to Beaver Creek next year into a slew of new discoveries all over the world. And the explosiveness of the stocks when you get a discovery hole that appears to be the start of something that will become an economic deposit is what happened yesterday in Prospector and 2 days ago and on Monday with Sterling. It's extremely rewarding, and I think we're probably gonna see more of these over the next 12 months, and this is a very exciting time for the market and for investors.
I think that's a great point. These companies that have done, and one thing I will say for sure is that the rising tide lifts all boats, but you want to be on the right boat, because those ones are the ones that are really going to go. And what you want is, there's a whole slew of new gold companies that are being created. There's a whole slew of if copper continues to move, there's going to be a whole slew of new copper companies. I'm sure there'll be a whole slew of new platinum palladium companies as platinum and palladium move. That's not where you want to get involved. You want to be involved in groups that have worked their way through the downturn, learned to be efficient with capital, have done all the legwork, right? Drilling a discovery hole does not, in the case of Sterling, there's geophysics, property-wide soil survey, property-wide geophysics, property-wide geosurvey, interpretation of that. There's a drill there already was there was analyzing the historic drilling, reanalyzing the historic drilling. There was a drill program that already occurred that did have certainly had some joy, right? Those are the spots where you go, okay, there's, now this all makes sense. If they, a group that's got, that has a new project with a couple interesting grab samples, those are, be careful with those. I mean, they can still make a discovery. It's statistically they can, but our preference is to be with, and frankly, people that we're close to that we know are going to be prudent with capital and prudent with their capital structure. Yeah, I want to add one other thing on the discovery, right? We had 3 companies put out drill results. We haven't talked about the third one yet. So I don't know if I want to talk about that, but maybe it's something different there.
In particular, these 2 groups that we just talked about, they spent a lot of time doing, like you mentioned, like genuine geological work, structural understanding, evaluating all the known work, revalidating existing data sets. That's boring work from the market's perspective, but it's very important work. Companies never get rewarded for that. People give them a lot of flack for spending time and money on that. And I think the point that to add to your point, then now that the market is hot, there's companies that are starting that process, but there's so much pressure to drill that some of them are going to go ahead and drill too soon without enough understanding, and they may not be successful. We've been of the view that you support the teams that are going to do things right, regardless of the market conditions. They're not going to drill too soon. Drilling is the most expensive part of any exploration program. You want to do it only when you have the highest degree of certainty that you can possibly have, depending on the on the location and the data available. But you want to exhaust all the possibilities on that front before you start drilling. So beware for the companies that have not done that work yet, and because of the current market environment that's rewarding success, they're going to try to shortcut their way into success. And again, we've seen this movie before. It's a lot of them will fail.
You talk about a lot of discussion in the mining space talks about the statistical likelihood of exploration success, right? Of an exploration property becoming a mine. And it's like, obviously the numbers are very, very low. It's like 1 in 1,000. The reality is that the ones that are successful are the groups that do the work, the groups that roll up their sleeves and do the geologic work. And that way they're much more efficient with capital when the expensive part, as you said, the drilling when they go. There's a lot of drilling dollars that get wasted. And we're getting into a period where the pressure is going to be to drill, and you're going to see groups waste drilling dollars because they're going at it too soon, because the market isn't going to be patient for them to go do this work that takes years potentially to do. Like porphyry exploration. How many purple dots do we see? Oh, it's got some nice pathfinder elements at surface, and here's a big purple anomaly, and we want to go drill it, and we're going to put one hole in it and see if it works out. You got to set yourself up to miss on some of those things, and Matt certainly did that, and with Sterling. However, we have one name that had exploration results that everyone had kind of been waiting for, and had the opposite effect, and it was very interesting to compare and contrast, because these came out basically the same day, or within the same sort of couple, and it's actually another copper hole, which was Midnight Sun Mining. They drilled a pretty good hole, almost 40 meters of 4.4% copper at their Dumbwa target in Zambia. However, unlike Prospector and Sterling, which were up 200% on the day of the release, that stock was down 20% and is off again today, which to me is very isn't surprising. And we actually, leading up, the stock has been on an absolute tear. We have made, congratulations to the Midnight Sun guys. We've made a ton of money on that stock. We bought, our original position was a 20-cent financing with a 33-cent half warrant. It peaked out at $1.90. All of shareholders have benefited materially from that. And the team have done a good job promoting the story. In fact, they probably did too good a job promoting the story. It was pushing 300 million market cap before those first Dumbwa holes came out. And that's something that you will see in this market, is that the anticipation of results will push stocks very, very quickly. And I think, we made the choice of, hey, we're up a lot. They've got to have, the quality of hole that they needed to drill. So keep in mind, right? So Sterling, who we just talked about, drilled 262 meters at 1% copper. Their current market cap is $70 million. Midnight Sun
in Western Ontario.
In Ontario, yep. Midnight Sun, who are in Zambia, their current market cap is $275 million, and they hit 40 meters at 0.4. Now, there's different parts of the story of Midnight Sun, and the part of the reason for that, but just on a pure risk reward basis, the quality of hole that Midnight Sun would have had to put out is very, very high for them to get there, to get that, to fill in that, to backfill that market cap. And that was our choice to the exit. Doesn't mean we won't go back if they continue to have success and start to fill it in and the stock share price pulls back. But I think that this is, this is one of the potential risks in this market, is that big move. If you see big moves anticipating drill results, you got to think about what kind of hole they need to put out to backfill that valuation.
Yeah, people love anticipation. It was telegraphed that these holes were going to be coming anytime after the conference season earlier in September. We didn't know exactly when they were coming out, but we were expectant as well. The stock started running, in particular last week, to the point where we believe, like you rightfully said, that either this was going to be the most, truly spectacular haul, or that we would get another chance to get involved with the stock again after the news with more information. And effectively, that's the decision that we made. I want to add that our investment there originally is because this is one of the best parts in the world when it comes to copper, or the possibility of a genuine, sizable copper discovery. So on that basis, that has not changed. They have a discovery hole. They're following up. They have the budget to continue drilling the Dumbo target. Expect more activity and more holes. They went up to a third drill rig, so they're pretty serious about building this out. And we'll be watching those results as they come out.
And they've still got the first and they've still got the first quantum holes. That the first quantum the copper oxide target.
The oxide,
yeah. They've been drilling in conjunction with First Quantum to figure out whether there's a source of feed for First Quantums.
I want to end with these three groups did something right, which is they came to investors, asked for money with a plan. They executed the plan, and now they've published the results. And ultimately, that's the most important thing that we look for when we invest in these companies is obviously the quality of the team, but also the ability to deliver on the plan. And these three guys have done that to this stage, and all three companies have re-rated significantly over the last 18 months. And I just want to highlight that and congratulate all three of these groups because it's well-deserved success.
And I think the important point is it's not just they are executing the good management teams, but we have the tailwind of a good market. And I think the tailwind of a good market, with groups that execute, that's, one of our criteria. There's lots of things we look at in investments. There's all kinds of little boxes that need to be checked, but one of them is management teams that execute. So all three of these groups, Sterling Metals, Prospector, and Midnight Sun all executed and did what they said they were going to do. With that, hopefully. I was going to say, hopefully it's a quieter news week next week as we get ready for get ready to film the next episode. But you know what? If we keep having news like this on our exploration stage stories, I think we'll be okay. So bring it on. Let's all the money that's being raised. I mean, I think this week there's been $100 million in financings too, which we haven't even talked about. So let's there's lots of news to come, I think, in the near medium term. And you've got all your seasonal drillers that are going to start putting out drill results in a pretty aggressive way, like Prospector. So thank you, everybody, and we'll see you next week.